From National Review headquarters in New York City, this is a Capital Writing author interview. Our guest today is Mark Calabria. Was the director of the Federal Housing Finance Authority. Currently a senior fellow at the Cato Institute. Before that, he was chief economist to Vice President Mike Pence and has lots of experience in the Senate Banking Committee, knows more about financial regulation in Washington, D.C. than just about anybody else on the planet. So we're very happy to have Mark with us. The book is called Shelter from the Storm, How a COVID Mortgage Meltdown Was Averted. Thanks so much for being here, Mark.
Yeah, thanks, Dominic. It's such a pleasure.
All right. So you were director of the Federal Housing Finance Agency. You say often that people misunderstand what the FHFA does. And so what in the world does it do?
Great question. Its primary purpose is to be a safety and soundness regulator for Fannie Mae, Freddie Mac, and the Federal Home Loan Banks. And the conceptual way to think about this, of course, is that markets and government have created an implied guarantee behind Fannie, Freddie, and the Federal Home Loan Banks, the GSEs, we'll call it government-sponsored enterprises, and that creates moral hazard, just as you see with like deposit insurance and other things. And so, again, the job of the agency is to try to contain that moral hazard. So, of course, to protect the financial system and protect the taxpayer. So, first, last, it's really a safety and soundness regulator, and you should envision it as an attempt to try to control risk that government itself has created.
Yeah, one of the things that we talk about with mortgages is always Fannie and Freddie. These are two very strange companies that we always refer to on a first name basis. So it's really not a thing we do other places, but they're also weird in the way that they're set up and in the way that they operate. Can you just sort of explain a little bit? Because these things get thrown around, we always talk about it, but I don't think a lot of people really fully get what they do.
Absolutely. So by structure, Fannie and Freddie are supposed to be private shareholder-owned companies that their charters are from Congress. So the typical, corporation, we go to Delaware or another state and get a corporate charter. These are corporate charters are handed out by Congress. They are limited use, which was historically the way many corporate charters actually worked. And they're not allowed to buy mortgages from you or I. We don't go and get our mortgage from Fannie and Freddie. We go get our mortgage from a mortgage originator, typically a lender of some sort, and they sell that mortgage to Fannie and Freddie. Now, they were created to be kind of a lender of last resort, kind of like the Fed in a way where you could sell them and get liquidity. And it was supposed to be really a stress situation, counter-cyclical. And of course, over time, it's grown to be very pro-cyclical. That is, expands with the marketplace. And so they have very big footprint. They end up, essentially being a duopoly of sorts for much of the mortgage market. They functionally failed in 2008 and have since been in what's called a conservatorship, which is essentially, an administrative government-run bankruptcy. It's kind of like a Chapter 7, but done by a regulator rather than by a judge.
Yeah, can we talk about the conservatorship a little bit? Because it's one of these things that, like you said, it's similar to bankruptcy, but obviously bankruptcy is usually a thing that ends. And Fannie and Freddie are still in this conservatorship, many years later and with really kind of no end in sight, right?
Well, I guess I should say we have had a few railroad bankruptcies in American history that actually went for decades. So, but those are the anomaly. As you kind of touched upon, I was on Capitol Hill, going into 2008 crisis, first working for Phil Gramm and then later for Richard Shelby. And so I had the benefit of actually working on and drafting much of the statute that created FHFA and the conservatorship framework. We borrowed from the framework at FDIC. So if you think about the recent bank failures that were taken into conservatorship or bridge banks, that's largely what we were trying to reproduce. And it wasn't meant to be never ending. It was meant to be the companies fail, you right size the balance sheets, you clean them up and you get them back out. So it wasn't meant to be an endless bailout, wasn't meant to be endless government control. And one of the topics of the book is this kind of frustration of mine of having worked on the statute, but B, more broadly, that frustration I think many of us share that wouldn't it be nice if government just followed the law? And that's a kind of a real theme in the book about how the agency over time, and even Fannie and Freddie over time, have drifted away from what the law says, and how, running that agency, I tried to get the agency and Fannie and Freddie all back within the four corners of where Congress put them. But again, that is really a theme of the book: the importance of following the law and respecting that, and of course, also from a regulator perspective. I consider myself what I call an Article One constitutionalist, and what I mean by that is, the big decisions are made by Congress, not by the regulators, and so I certainly saw part of my job as, whether I thought there should be a Fannie or Freddie or not, that's Congress's call. My job was to carry out what Congress had dictated to me in the statute. And so that really is, I'm hopeful. We did a lot of work, and if it wasn't for COVID and, the election, we would have gotten Fannie and Freddie reprivatized. The clock ran out on us, and obviously the pandemic took over many of our agendas. But the plans are there on the shelf. A lot of work was done when I was there, and so I am hopeful that the next Republican administration will finally, fix these strange creatures.
Mm-hmm. Why is it that only you said the next Republican administration? Why is it that Democrat administrations don't seem to view that as a bigger priority?
It's a great question, because I'd like to think we should all share the philosophy of simply following the law and the decisions that Congress has made. I think this administration, the Biden administration, and to a degree the Obama administration, looked at this partly as, these are, we have them now and we're going to use them for whatever purposes we want. And they've become kind of off budget, slush funds, if you will, and they've pursued agendas without a real basis in the law. And unfortunately, nobody's really got an avenue to sue to stop the administration. So it's one of these things like, well, who's got standing? We're going to do it anyhow. And I think, unfortunately, not a lot of members of Congress really get it. So you don't get as much pushback. You get pushback sometimes from Republicans, but it's a complicated set of issues. It's also complicated by the fact that a lot of people within, the real estate industry, who are generally pretty friendly with Republicans, aren't necessarily uncomfortable with the status quo. And so, the taxpayer really is not being heard at the table. And that's part of the problem. They were heard during the process of drafting the legislation, but they really aren't there pressing it every day. And so I do think there's a real concern. And again, the Democrats have largely used this, as a way to create a slush fund. They've also used it to some extent that I mentioned at the beginning earlier, the concept of an implied guarantee. Now, there's a degree to which that kind of sets a contradiction in terms. I mean, how can it be a guarantee if it's not on paper? And so the guarantee is essentially this kind of Wall Street creation of the expectation that, despite this law says that there's no backing and creditors to Fannie and Freddie are at risk, there's the Wall Street expectation that they will be rescued. And like one of the things I found was the biggest opponents of letting Fannie and Freddie out of conservatorship and reprivatizing them were actually companies like BlackRock and PIMCO, because they hold a lot of Fannie and Freddie debt, and they want the taxpayer to be behind it. And their argument is essentially that as long as it's controlled by the government and it's via the conservatorship, then we, the American public, are on the hook. And again, that's not legally the case, but so a lot of this is really in that gray area. But so there's a fair amount of Wall Street opposition to actually fixing the companies. And again, there's a fair amount of industry. And again, there's sort of left-wing advocacy that looks at these as slush funds. And again, the sad truth is there isn't really, there really isn't a constituency looking out for the broader American public pushing back on this.
Mm-hmm. You mentioned, the Biden administration's problems with this. It's important for viewers to know that President Biden fired you. You talk about that at the end of the book about the Supreme Court case that said that the president is able to fire the director of the FHFA. Now, in other places, in other cities, in other industries, getting fired is because you did something wrong. But in Washington, D.C., it's just because... Right. In Washington D.C., it's just because somebody else wins an election. So, it was purely a political thing. Can you talk a little bit about the shift of the FHFA from going to an independent agency to being one that is more controlled by the administration?
Yeah, and this is a great topic. I talk about this a little bit in the book and kind of end the book with the case. But to me, it's also a dividing issue, an important dividing issue on the right, which is the parameters of the unitary executive. And of course, many of us were surprised how quickly the Biden administration embraced a theory of the unitary executive when they thought they got to make the decisions. And so I worry, like the Federal Reserve, where there's a temptation for any White House to try to pressure the Federal Reserve to produce good economic outcomes before elections. I really do worry about the loss of independence for FHFA. And again, we've seen it where the Biden administration has very much intervened and driven. We've seen a real weakening of underwriting standards. And again, this is at the top of a housing market, if not a deflating housing market. And so a real push, like many of the things that contributed to 2008, where there's this huge government push to get people into homes, you're seeing that again. And Congress created FHFA to be independent of the White House. Again, there was always the case that a director could be removed for not following the law. So there was always a for-cause removal, as they say. But it was really meant to insulate from the day-to-day politics so that you would not have the temptation to try to, gin up the housing market before an election. So I do worry that obviously the first best outcome to all this is we really shouldn't have a Fannie and Freddie, and we shouldn't have these entities, but we do. So how do you control that risk, and how do you reduce the temptation for politicians to use it for short-term advantage?
So, as I mentioned, you left in 2021. You came in 2019, and then right after you came in, the pandemic happened, basically. And that's basically that's what your book is about. It starts. No one really knows what's going on right away, right? Everyone remembers February and March of 2020 when we all weren't quite sure, and then the NBA stopped playing, and then everyone kind of has these benchmarks in their mind of things that happen. You talk about some of those experiences in your book of having to shift to telework and all the rest of that. How did you get good information in that time? Because there was so much chaos going on, especially in financial markets. How were you able to get good information to act on and make good decisions?
Great question. And to put it in frame, the book begins in January 2020, and where we're still starting to hear about like lockdowns in Wuhan, and, the first US case was being announced, but we were still very much, in the dark. Obviously we were kind of in the dark in COVID. I had the benefit from coming from Vice President Pence's office, who, of course, as you remember, was tasked with the chair of being the COVID task force. I was very close and worked pretty closely with Dr. Carson during that time, who was the HUD secretary. So we worked together on housing issues, but it was actually pretty helpful regularly to talk to. Granted, he's a neurosurgeon, not a virologist, but it was helpful for me to talk to Dr. Carson regularly and kind of get his take on what was going on. But in the marketplace, there were a number of things. I've got a PhD in economics, and I'm very data driven person. So I'm always following like what's going on in the market, what's the data we're seeing at Fannie and Freddie. But more importantly, you have to recognize that even if you've got a lot of data, it's almost always stale. How out of date is this? How quickly you're seeing things. So we spent a tremendous amount of time, and I mentioned some of the people we talked to, CEOs in the mortgage real estate industry, home building industry. Like, what are you seeing in terms of traffic? Talking to people who really are on the front lines of the real estate housing market at that time. And again, anybody who would have a call with us, anybody who we thought we could listen from, while also trying to have a very analytical perspective and a very data-driven perspective. So, I try to, I hope that one of the things that kind of shines through the book is a sense of, I hope, humility, where we were really, and this is where I'm kind of, very much a Hayekian, if you will. You're just operating in such an environment of uncertainty. And how do you accept the level of certainty you're comfortable with making decisions? How do you be honest with yourself about that level of uncertainty? But how do you reduce it? And how do you try to get multiple points of information? And an underlying theme, which I hope even those who may not particularly be interested in the mortgage market or COVID, I think there's a lot of lessons that take away of just trying to manage a government agency or any large organization during a crisis. And one of the really big themes is I'm trying to counter a narrative that often came out of 2008 and even came out of 2020. You may remember, and I think since I served in the George W. Bush administration, I can probably get away with picking on him a little bit when, he said we need to say, to abandon capitalism to save capitalism. I try to make the argument in the book that that's the absolutely wrong approach, and that in a crisis, in a sort of like dense fog environment, if you think about it, your principles are the roadmap, and you're less likely to get lost and flounder about if you actually have a model of how the world works and you follow it. Then, of course, you adjust if it may be off. But if you don't have that and you're just responding in a very ad hoc manner, which I think characterized a lot of 2008, as well as current reactions to Silicon Valley Bank and others, that you're really kind of lost. And so, to me, a big message away from this is don't abandon principle in a crisis. In fact, use it as your guide.
One of the big things that you got right was that this COVID would be a bigger problem for renters than it would be for homeowners. Can you explain why that was the case and how you figured that out?
So, I mean, I'll start with the probably thing we can all relate to, which is, we all quickly stopped going to restaurants and bars. Maybe, some people probably maybe went to the bar more often, I think, as covered. But all that said, a lot of the retail and a lot of the businesses that quickly shut down during COVID, the employees of such are predominantly renters. And we were really seeing that immediately. We were looking at early employment data quite quickly. And again, you could see the pull down. So we were able, probably by the middle of March in 2020, able to kind of figure that about 40% of the job loss was households with mortgages, and about 50% were renters, and about another 10% were homeowners without a mortgage. So while we immediately had steps that we could set up for homeowners, because we'd experienced this kind of before, not just in 2008, but relief programs related to hurricanes like Katrina, Sandy, Maria, these things. But, the renter stuff was brand new. And it was just sort of like, well, we've never set up anything like this before. That's really where some of the stress is going to be. And it really required some unique solutions, because while Fannie and Freddie have a lot of information on the homeowner, we have no information on the renter. In fact, we don't even know whether the rental unit is occupied. All we know is there's a mortgage on it and who has the mortgage. So it really took a lot of creativity. I should emphasize this was very separate from the CDC moratorium, which I talk about a little bit in the book, but that was outside of our purview. We set up something that was voluntary, so this wasn't like the eviction moratorium. So essentially what we created was, if you, the landlord, agree not to evict people for non-payment of rent, so you could still evict them for nuisance, being a problem, all sorts of other reasons, we would give you a pause on your mortgage and work with you during that time. And again, to make the mortgage and make the rent sustainable. I also kind of mentioned, I think of myself as to a year ago, an accidental landlord, because I had a property that I lived in, bought another property, kept the old property, and I lost probably about 6 months worth of COVID rent. I sold the property about a year ago to give you an indication of where I think the housing market's going. Take away from that. But, you're also, so I'm not unsympathetic to what landlords were going through. It was a very difficult situation on landlords. I'll say as an aside, something that troubles me is how much of the public debate has become anti-landlord over the years. It's an important profession. Providing shelter for somebody, that's a basic necessity and a need. And we need more people to want to become landlords, not less. But it's a difficult job and often a money loser. And so all that said, we wanted to provide some assistance. And, one theme of the book is we managed to actually pay for all the assistance we provided. We charged it other parts of the mortgage market that we wanted to minimize disruption. The industry, of course, hated that, but we, again, didn't go to Congress asking for money. We were able to do this. And another importance of that is because we didn't ask Congress for money and we paid for it, it wasn't inflationary in the same way that so much else that was done during that time. So we really tried to, I wanted this to be a roadmap of how you could have an effective program. Also note, compared to 2008 on the homeowner side, We helped twice as many people. We did it 6 times as quickly as it was done in 2008, and we did it at a fraction of the cost. So whereas the various assistance programs for homeowners in 2008 was probably on the neighborhood of 25, 30 billion, we did this close to zero because we found ways to pay for it. So again, what I wanted to, a theme of the book really is a pushback against this kind of 2008 narrative of either you massively bail everybody out or you do nothing. That, you can actually have a small government targeted response. And we did this in a way not as charity. We did it not that we weren't feeling charitable, but we did this in a way of, this is how you'd run a business. And I think the best indicator of this is the programs we set up were copied by private businesses like, portfolio lenders and others who had no obligation to follow what we were doing, but they did mirror what we did, which indicated to me we were in the right ballpark.
Yeah, you mentioned landlords earlier. One of the interesting facts that I took out from the book is, kind of the breakdown of who renters actually are, because we have this picture of, big apartment buildings, and that's certainly part of rentals. But I think you said like 40% of renters live in single family homes, and
yeah, and it's just as much as, and if you really kind of put it in a broader context, half of renters live on properties of less than 5 units.
yeah,
And again, I know if you go to New York, you think everybody's in some 100, 200 unit property. That's actually not most of the mortgage market, not most of the house rental market. Third, as you've touched upon, is single family. Some of that, of course, are row houses, but there's a tremendous part of the rental market that's not the way we think about it. And of course, that's mostly rural America, suburban America. We tend to think of renting as a very urban thing. And of course, urban areas have higher percent of renters, but it also really kind of presented some unique challenges to us, partly because a lot of the rental stock, are kind of like my situation where I moved from a home and I had a previous home, or people have inherited homes. So a surprisingly large stock of single family rental properties don't even have mortgages on them, which of course limited our ability to help them. But on the other hand, it gave the landlord more flexibility in that they didn't have to cover a mortgage payment. So I do try to give some stats. I promise the book's not math heavy, but there's a lot of, I think, helpful stats to understand the mortgage market, the housing market, and some actually fascinating things like, the shockingly large percent of people who bought homes in 2020 sight unseen. It's like, I'm not quite comfortable with that myself, just deciding I'm going to buy a home looking at a video walkthrough. But wow, that was a big trend in 2020. And so I did want to kind of put in context many of the market changes we saw in 2020.
yeah, and it seemed like I took you to be saying in the book as well that you didn't really think the eviction moratorium that was started under the Trump administration and then continued under the Biden administration, you didn't really seem to think it really needed that. Is that right?
No, correct. Part of it is, of course, we had all of these warnings of so-called eviction tsunamis, and I think it misunderstands a fundamental relationship between the landlord and the tenant. Again, and I say this as partly someone who's been a landlord. A good tenant is golden. Anybody who's a landlord said all it takes is one or two bad tenants to just completely erode any profits you've had. And so there's this kind of view that landlords are just like, trigger happy to throw you out of the house. No, that may be true with a bad tenant and a destructive tenant and a late tenant. And like I said, I lost half a year's worth of rent from one of my tenants losing their job. I never recovered it. They moved out and, good luck. I'm not going to get that back. There's pretty much no way. And so the roundabout way of most, and of course, also keep in mind, we're in a pandemic. So the ability of a landlord to evict somebody when the courts are closed and when the sheriff's deputy doesn't want to come through the house, and then you think you're going to easily get somebody else in there. So again, there's just very strong incentives for landlords to work with tenants. And we saw that. And it's one reason why the predictions of eviction tsunamis did not happen. My view is that I think it was largely politically driven. And one of the things I do talk about in the book, the eviction moratorium initially really did come from President Trump. It wasn't something that others in the administration, of course, I find particularly fascinating given how much of his career has been as a landlord. But again, so he does have a strong understanding of the rental market. But I think the overall concern that, if we didn't, that wasn't put in place, that you would have some tsunami. And of course, it also bears remembering that there was a patchwork of eviction moratoriums, across jurisdictions. And as I mentioned, for at least the first probably 2 months, the eviction courts themselves were closed because of the pandemic. So a lot of factors here. But one of the things I try to, one of the themes of the book is, you need to take a data driven, calm, thoughtful approach in crises and not give in to the panic, because it's the panic when people do all sorts of let's spend untold amounts of money and let's not think about the consequences of it. And so I think you can have a deliberative, I hope to have shown that you can have a thoughtful, deliberative, targeted, and cautious approach to crisis response that doesn't imply you do nothing.
Yeah, you definitely experienced the panic. You talk about in the book, from people on Wall Street, from the press, from members of Congress. You got it from all directions. I mean, just on a kind of personal level, I mean, did that take a toll on you?
I was kind of prepared for it in some sense. I mean, obviously, it is frustrating. As you kind of touched upon, I mean, there were places like the Financial Times, Bloomberg, newspapers that were calling for me to be run out of town and fired. And, I repeat some of it in the book because it was honestly a bit amusing to go back. It can be amusing to me because I turned out right and that turned out wrong. But when you go back and you read some of the crazier stuff that was said about me, and I have to laugh in retrospect. Unfortunately, at the time, I was just so focused on what we were doing. Now, I didn't want to ignore legitimate criticism, and I think most people who did interact with us would tell you we were very open. If you came to us with data and said, we think you're missing X, we took that seriously. Now, if you just called to complain and said, I'd like some taxpayer money, but we didn't take that as seriously. But there really was a lot of criticism. Of course, it was disappointing that there wasn't much as support. There were a few people, I call out, and he's already missed in my opinion, but then Congressman Trey Hollingsworth from Indiana called me a couple of times just to say, hey, Mark, I know you're taking some heat, and I just wanted to call and tell you you're doing a great job. Keep it up. So you get a small number of those, but 95% of what you get was essentially, criticism. I would, however, say that, because I'm a very data driven and I happen to be in this position of managing this and be fairly knowledgeable and was a real student of the 2008 response, that even when I got on the phone with Democrats, so for instance, I remember very early on having a phone call where it was me and all the Democrat members of Senate Banking Committee. So you've got like Elizabeth Warren on the call, Sherrod Brown, and they asked me questions. I responded to the questions. At the end of the day, they definitely kind of came over to see it where I was coming from. And I think they walked away with, okay, might not always agree with this guy, but he's got facts, he's got analysis, he can explain to us what he's doing. And so obviously the easy path would be just to give in to, complaints and concerns. But I have found that if you arm yourself with facts and analysis, most people who can't challenge it will be appreciative that you walk them through it. And that's the other kind of theme of the book. Obviously, I've been very lucky to work for people like Phil Gramm and Mike Pence. So, my partisan particulars are not a mystery. But a theme of the book is, I really bent over backwards to be on the phone with Maxine Waters pretty regularly. She was the chair of financial services that time. And I talked to Elizabeth Warren, Sherrod Brown pretty regularly. And again, to me, if you are aggressive about making sure people have information, don't give people a process reason to object to you. Make them make it about the policy. And then, you will get a lot of goodwill that way. And again, if they don't understand why they disagree with you, then they're going to have a harder time disagreeing with you. So I do have some tips in the book how, I got confirmed in a very contentious Senate environment and I think the things you can do to kind of engage with Congress. This will work for some agency heads. It won't work for all. So it really just depends on the circumstances you're in. But those were things that served me well. And I did end up having, I think, a pretty good relationship. And again, it helped me, quite well. And I also looked at September 2020, I bet a 4-hour hearing in front of House Financial Services as the sole witness. And they were throwing things at me about my response. At the end of the day, I came out stronger than I went in because I looked at it as an opportunity to make my case and to engage with members. And so there are, again, some tips that if one ever finds themselves in that kind of situation, hopefully some of this advice will be useful.
Yeah, you talk about, how you were able to get along with people you disagreed with. You were able to kind of, even people who, very strongly different political
Yeah.
views. But to the extent that there's a villain in this book, it's Wall Street.
Yeah.
And free marketers like you and me often get accused of being shills for Wall Street. But I mean, what? First of all, why do we get accused of that? And second of all, what was it that made Wall Street such a problem?
The accusation's a great question. Partly I think it's just laziness by most of the press. You can throw that at somebody. I mean, I don't think I talk about this deeply in the book, but really, to the extent one can have a fun moment during a confirmation hearing where you're getting grilled. There was a moment when New Jersey Senator Menendez was accusing me of being Wall Street stooge, basically, and my response to him and was to say, that one of the proudest moments of my life was to be on the Senate floor standing beside my boss, Senator Shelby, fighting the big bank bailout TARP. And of course, Senator Menendez voted for the TARP. So he immediately was kind of like, wait, I'm the Wall Street bailout guy. And I didn't have to say that, but that was clear. And so, there is an expectation. And again, the unfortunate truth is there are the Hank Paulsons in the Republican Party who are fairly pro Wall Street. So there's an element of the party, fortunately, and I think this is less appreciated. For the time I was on Capitol Hill, leading up to 2008, the influence of Wall Street on the Republican Party is considerably less than it was. And in fact, it's funny to watch during the debt ceiling debates where the Democrats are lamenting that Wall Street has less influence on Republicans. So there is a reality, and of course, Wall Street has a tremendous amount of influence on the Democrat Party as well. I would argue more. So some of the complaints from that were this assumption that there would be rescues, and again, there's a tremendous part of Wall Street. I'm hesitant to paint a broad brush because there are very hard work and smart people who actually put money at risk and take the losses in lots of parts of our financial system. And then, unfortunately, there are large parts of the financial system where, heads they win, tails they want the taxpayer to take the loss. And you see a lot of that on Wall Street. And of course, Wall Street makes a lot of money on underwriting debt securities from Treasury, as they make a lot of money off Fannie and Freddie. As I talk about in the book, the Fannie and Freddie debt market is the second biggest debt market in the world, second only to Treasuries. So this is a tremendous amount of fee income for Wall Street. So it really is a sort of feeding frenzy for the financial markets that has no resemblance to actual capitalism, in my view. And so I think that is, Republicans, we need to be honest about what are the parts of the financial system that support free markets and support growth, and then what parts of it are cronyism. And, sometimes I'd be the first to say there are gray areas, but there really is an attitude on Wall Street that they should be rescued, that they are so important that they cannot take losses. And of course, my view is that capitalism only works as a profit and loss system. You have to have a way to weed out ineffective institutions. In fact, I think the uninsured depositors forcing the closure of Silicon Valley Bank was a good thing, because I can tell you the regulators would have been another 6-12 months doing anything, and the hole would have been deeper. So you need more market discipline. And of course, it's fair to say it's not just Wall Street. We all like to talk about market discipline. I know, Dominic, you and I think market discipline is important, but it's also fair to say that not everybody likes to be on the receiving end of market discipline.
Yeah, for sure. Much has been made about how these concentrated interest groups are able to get their way and then spread the costs of, they get all the benefits and they spread the costs over everyone else. And that's a pretty standard economic story, pretty standard political story that most people are familiar with. One thing that you get into in the book that I thought was really interesting was sort of an additional part of that argument, which is that sometimes the interest groups don't actually represent their members very well. You talk about trade associations. which come to you or to any other regulator asking for X, and then you go and talk to CEOs in that industry, and they're asking for Y. So, can you
It's
explain that dynamic a little bit?
it's a fascinating experience, and I think I had a unique set of experiences. I did my PhD at George Mason and was very lucky to take classes with James Buchanan and much of the public
Oh, wow,
choice.
that's awesome.
Yeah, no, probably one of the last few years he was teaching. So, um, so much of the public choice literature actually is fairly descriptive. It's not, there are misses and there are limitations, sure, but it's a helpful way. And I certainly had been a student of interest group politics for a very long time. And I also worked at a couple of trade associations, early in my career in their economic shops. And I had the benefit of having been inside many of the associations. So, it at least gave me some degree of goodwill. They knew I understood their constraints, and I tried to work within those to the extent that it didn't undermine what we were trying to achieve. But also from having been at trade associations and been on Capitol Hill and meeting with them and their members, the lobbyist incentive, again, the minor economist is you've got a principal agent problem, and the agent is not always a faithful representative of the principal. And in this case, obviously, the principal are the members of that trade association, the industry behind it. And then the agent, of course, is the trade association. What you often see with a lot of lobbyists, and it's not unusual for people to jump around from lobby job to lobby job, even to different industries. I've known people who have lobbied for banks and airlines and all sorts of things, all as one person, because their skill set is Washington, not the industry per se. Since their skill set's not the industry per se, they're not necessarily an expert on that industry, but they are an expert on Washington. And their ability to be successful in Washington often depends on maintaining goodwill and ties. So there is a degree to which you don't often see the same sort of fight. Like again, as I mentioned, you can't necessarily rely on the lobbyists as experts for the industry because that's not really their expertise. They're not necessarily in that market. Now you do have to. I mean, I say in the book, you have to talk to the trades, but you also need to talk to the actual people in the industry, or you won't get a full picture of what's actually going on. And so it is really important. That's one of the things I did pretty regularly. In fact, I talk directly to CEOs more often than I ever talked to lobbyists when I was at FHFA. And, I do believe even if you're going to disagree with people, give them access. And so perhaps one of the lessons of the book is, don't cut corners on process. It's amazing what you can get people to agree to or at least live with if they've had their say. And I do believe that you have a responsibility as a public servant to give people their say. That doesn't mean you have to agree with them and give them what they want, but you have an obligation to hear them out. And I took that quite seriously. And most people feel much better about me to hear it out. But again, a big lesson is the incentives of lobbyists and the incentives of, their clients are not the same. And you will not always get the same sort of information or same quality of information. And I've certainly seen the other where, lobbyists have lobbied their clients to kind of go along and, protect in some sense the interest of the lobbyist. So again, I would say, if you're a member of a trade association, you hire a lobbyist. I mean, sometimes you have to do that to navigate Washington, even in a defensive manner. But it should always be a trust but verify relationship.
You mentioned process and sticking to the process. One of the things in this book that stuck with me is, at least in the housing regulatory area, one of the ways to shrink government is just to follow the law as written.
And this was a big lesson that I want anybody who serves in government to take away, which is, if all we accomplish is simply to get the government within the law, that's a big accomplishment.
Yeah.
And one of the things I found was, and this was even, I mean, maybe I had one or two examples of where a member of Congress might have asked me to do something that wasn't legal. And I said respectfully, I don't have the authority to do that, so we're not going to do that. Anytime, I think pretty much 100% of the time when lobbyists, advocates came in and asked me to do something we didn't have the authority to do, once I explained, here's the four corners of law. If you'd like to have this done, you need to go get Congress to do it. And I'll be happy to carry it out. Nobody really argued with that. People, they didn't love it, but they respected it and they understood it. And they were at least hesitant to ask you to just violate the law. And, it probably also benefited from, I worked on the statute that created the agency, even statutes that I didn't work on that affected me. I picked up the statutes and read. Another lesson from the book for future political appointees is you cannot micromanage the government bureaucracy, but you also cannot simply delegate to the legal staff. You will sign your name to all sorts of things of questionable legality if you don't actually pick up the statutes and read them yourself. Even if you're not a lawyer, I'm an economist, not a lawyer. And the number of times where I stumped government lawyers with questions that they really should have known is shocking to me, just as an experience. So you'll get all sorts of shoddy, half done, half baked legal advice if you don't actually do your own work. And now I also benefited from bringing in a lawyer that I trusted to kind of review the work I got. But you gotta double check it yourself. But again, one of the other interesting facets of the book. So maybe I'll start it with one of the shockers. I started at an agency where one of the very first actions I had to take was settling the sexual harassment claim against my predecessor. And so there was the horrible morale at the agency. And as you can imagine, the politics of the staff at the agency were not my own. And, we really turned the agency around, we turned morale around, and we got people to back us. And I walked through some of the ways in which we did that. But one of the ways that really resonated was we grounded everything we were doing in the law, the statute. And, it was something the staff could understand. Obviously, they could go to law and read it. So they knew we weren't pursuing our own agenda. And I think it really kind of gave them direction and gave them a sense of, we're all in this together. And, I think a lot of Republican appointees make the mistake. I mean, yeah, it's going to be a few saboteurs here and there. But to use a military term, you have to think of the career staff as a force multiplier for you. You will limit your own effectiveness if you can't get them behind you. And you have to be able to get them behind you with a very simple, straightforward message, and one that resonates is implementing and following the law. This may not work at every agency, but I found it worked well for me. And I found it was something where, you're not engaging with a debate over people. Because you're just quickly saying, listen, that's fascinating. That's interesting, but that's not what the law says. And we're going to do what the law says. And so one of the other messages to take away from that is, if you don't insert yourself into the role of Congress, you save a lot of brain bandwidth, because you can simply say, here's a whole set of issues that Congress has decided. I'm not even thinking about that. That is somebody else's job. I'm thinking about what I can fix, and I can guarantee you there's enough that you can fix within your own power that you don't really want to go down the sidetrack of debating the broader issues. And again, as a pundit now, as a think tank's employee, my job is to think about the bigger issues. But as a regulator, your job is to follow the will of Congress, to the extent that it is constitutional.
I recently talked to Joshua Wright about this issue of staffing at agencies, and he was an FTC commissioner. He was a Republican appointee. And it's very much the same kind of dynamic. It's a federal agency. Most of the people who work there do not share his politics. But he talked about how the level of professionalism among the staff as being extraordinary, and the level of commitment to the facts and commitment to evidence and that kind of thing as being something that was allowing him to be effective in that role. Even though he didn't agree with these people politically. You talk about sort of similar things, I think, at the FHFA and talking about what you did to improve the morale there, but also that you just took time to meet with a lot of these employees and get to know them a little bit.
And this is, I think a lot of management, both in government and outside of government, kind of see some of these efforts as a waste of time, but they're not. They're critically important. And to again, repeat my point about a force multiplier, there's a lot of ways you can get people behind you that have nothing to really do about political differences. So when I left FHFA, it was about 700 people. When I first started, I told my chief of staff, and I guess another message of the book is get yourself a great chief of staff. It makes all the difference in the world. I told my chief of staff, I want to be able to have a one-on-one brief conversation with every employee of the agency before I'm done. Obviously, COVID kind of threw that off, but we did one-on-ones and roundtables. And so by the time I left, out of 700, I had had a brief one-on-one with 675 people. Now, we structured it so it didn't become just a way that for them to complain. In fact, it was structured around two questions. I asked people, what kind of hobbies did you develop during COVID? Did you, get yourself a pandemic puppy or a COVID kitten? And I know it sounds a little silly, but there's a tremendous amount of power in asking people about their children or pets. And I mean, it shows you identify and you care, and you should say you care because people have a life and they have things that are important to them, and giving them an opportunity to talk about what's important to them. I still get a little misty at the one staff person who told me, during COVID, he bought a piano and learned how to play because growing up in China, his family was not allowed to have a piano. And that, brought a tear to my eye. And it just reminds you about what makes America great. And so, again, reaching out to people, giving them an opportunity to share some of who they are and expressing an interest in them. Again, it is actually, I would argue for a leader, the best use of your time because it will bring people to much more likely to carry out your agenda. It's much harder for people to want to sabotage somebody they like. And again, you don't want to do it in a way that's insincere. I actually like people. I know might be a shocker. And I think that, there's a lot more agreement that you can reach with people and you respect them for who they are. And of course, reminding them at the end of the day, you're the Senate confirmed boss of the agency and the buck was going to stop with you. And certainly one of the other lessons is you have to own decisions. And I was willing to own my decisions and explain them. But you get people behind them by treating them as people. We held town halls pretty regularly. I think the staff were often initially surprised at my ability in town halls to call on people by name who would raise their hands, random employees like, oh, what do you, so-and-so. And so, again, taking an interest, is important. Going to the agency-wide events and things like that. I'm a big believer in, again, not just government, but private sector management. A good manager has to be seen. You've got to be around. People need to know you're there, and people need to know you're accessible, but in a way that's not overwhelming, your time. So there's a balance, and there are things I talk about in the book that I think are useful management lessons for anybody. But again, that's really one of the things that made us quite effective. Was we leveraged the career staff and we got them in our corner. I do regret, I said early on to my chief of staff, I kind of think about three types of government employees. A is they're actually, maybe 15, 20% of an agency staff who are well-meaning, will work hard if you point them in the right direction and give them support, and, and they may need some course correction now and then, but they'll try to do the job. And then there's B, saboteurs. I mean, either because they object to you personally, your politics, or even the mission of the agency, or have their own agenda. And then there's the third category, people who just aren't actually doing a whole lot of much of anything. And I just said to my chief of staff, that third group, we're not going to have time this year to deal with them. Maybe we'll get to them eventually. But we're going to focus on the first two because you got to lift up the people who reduce stuff and high performers, but you also have to find, the saboteurs. And the one probably biggest regret I have is, like I said, I was there 11 months before COVID hit. It's often easy in the first 4 to 6 months running an agency of trying to figure out who is in the high performer category. It takes you much longer. Most of the resistance are not raising their hand. Mm-hmm. And so figuring out who the problem makers are. So, if someone was to ask me, what's the one thing I regret I didn't know more of, I would say fire people. We did not get around to being able to move out and isolate enough people because, again, COVID hit before we were able to really identify people, and that became much harder during COVID. So if I had to do it all over again, I probably would have moved much more aggressively. And then there were instances where we moved people around. Often you find that there are people who have a very good skill set and they're just in the wrong position. And, there were instances where I probably took longer than I really should have to move some people around and reassign some people. But, you gotta make tough personnel decisions and you got to be really dogged about it. But you got to put most of your energy into the category of those doing good or those doing harm, and then a secondary emphasis. And again, I share the annoyance on, that there's a large amount of the federal workforce who get paid pretty well and don't do a lot. But you really got to triage the situation and triage it on the high performers and then the troublemakers.
So that was a lot about internal communications within the agency and how you handle, relations with employees and things like that. But you also talk in the book about sort of outward-facing communication, how you talk to the public, how you talk to the press, and as a Republican appointee who worked for libertarian groups and all the rest of this, the press is not going to give you a fair shake. So,
Correct.
how did you handle that, and what sort of advice would you give to other conservatives and libertarians in similar positions?
So, there's an entire chapter on that topic in the book. And, I would start with what you said. They're not going to be fair to you. And that's just the reality. Now, you could complain about it, or you could accept that, the deck is stacked against you, but you're going to play and you're going to win anyhow. And I think that's the attitude you gotta accept, that you're gonna play it better than they do, and you gotta realize where you have the benefit. Like, you often can set the agenda. I also tried to make sure that, for most political appointees, you've got a small area. Like, I had mortgage finance; that was my lane. And so there's only going to be written and covered so much mortgage finance unless there's some sort of scandal. So if you think about it, what you're really trying to do is, as they say in, I guess, basketball, flood the zone. I mean, you try to drive the agenda with what you're doing rather than let other people drive the agenda. And because you have the bully pulpit, you are in much better position to do that than, the interest groups or the others who may be opposing you. You also just have to spend a tremendous amount of face time with reporters, and trying to ask their questions, engage with them, and also just be, really transparent. My objective, and I think I actually got here with most of the beat reporters who covered our issues, was that 9 times out of 10, they could repeat. They knew what I was going to say before I could say it. They knew what my agenda was. They had my own bullet towards, because they just heard it from me so many times. And again, that was also grounded in statute. So lots and lots of repetition, but also recognizing that, the best communications defense is a communications offense, where you were just out there, out there, out there. And again, you got to have a great comms team, people who've been battle tested, people who get the industry, and people who can explain it. And also, if you're consistent and you're transparent, and but most importantly, don't lie, don't make stuff up, be on target. And so one problem I never had was, by and large, the staff, the beat reporters and the broader press largely knew I knew what I was talking about. There's always the point where, they're going to repeat some anonymous source who says something derogatory about you. And unfortunately, a lot of journalism isn't that way. And there were some reporters who I never thought we got to where we should have been. But you also have to have an understanding of it, the game they play. And so, for instance, the norm in political policy reporting in Washington is the reporter talks to 10 different people, and if 8 of them say X, that's what's going to get reported. And so they're not necessarily reading the statute, reading the bills that are passed. They're getting it from the constituency groups who may all be talking to each other and have a coordinated campaign. So it's really just understanding how that works against you and can work for you, and how you can counter that. But really, there's no substitute from even you, the agency head. You got to have a great comms team, but you can't just expect them to do it all. You have to be, the face of it. And again, that's true for a CEO as well. You have to do a lot of face time. And even with reporters who are never going to give you a fair shake, sit down with them, talk to them, and ask, kind of answer all the questions and push your agenda. So I give a whole, kind of some words of advice in there, but you can't hide, and expect that, it's just kind of like you're going to be treated fairly, or people aren't going to find you. And I had, lots of like smear pieces written about me. And again, you also, on the other hand, there are instances where you have to recognize whether a fight. We talked earlier about, some of the press, some of the attacks via the press when I said no to bailouts. And, a thing you need to remind yourself pretty regularly is, when is punching back effective and when is punching back a distraction? You remind yourself pretty regularly, what's the agenda I'm trying to accomplish here? and don't engage in debates and fights that are distractions from that, because you can get completely sucked into that. So I think there's a lot of time management lessons on, what battles you pick and which ones you walk away from.
We talked earlier about relationships with Congress and talking to them. There were two people from the executive branch that really were big parts of this book, and that was Steve Mnuchin at the Treasury
Yeah.
Department and Ben Carson at Housing and Urban Development. And I thought that was very interesting, that those are the two people that you said overall were very, very good to work with and that kind of stuff, because the conventional wisdom at the start of the administration for those two guys was, why are we appointing these people?
Well,
Because,
I mean, I was
Ben Carson, brilliant guy,
yeah.
neurosurgeon, doesn't, he doesn't know anything about housing. Steve Mnuchin doesn't have government experience. Why are we doing these? And so, but you said in your experience that they were really, really good and really helpful to you. So can you talk about that a little bit?
They really were, and I shared some of that. I say in the book, Mnuchin had a different, candidate for the job I eventually got. He and I had worked on taxes and trade issues, and I am also candid. There's some disagreements I had with Mnuchin, and I know he's recently come out and called for unlimited deposit insurance from that, and I disagree with that. But I think he's actually, massively underrated as a Treasury Secretary. I think he's the best Treasury Secretary we've probably had in a very long time. I recognize the competition is not all that stiff, but all that said, the guy really, his instincts are generally market driven. I don't think he's quite as probably, philosophical as you and I are, but, he's got generally good instincts. He sees himself as more a, regional banker than he does a Wall Street guy. He's actually very smart. It's a big study. He does all of his own work. And so he's not if you're going to knock him, he doesn't delegate enough in my view, but he definitely digs into the detail. And again, his instincts are often in the right direction. Of course, I don't think there was a cabinet member who had a better sense of when to be around the Oval and when not to be around the Oval than Stephen Mnuchin. But, I'm actually, again, some disagreements notwithstanding, a big fan and think he's underrated, and really ended up having a good experience with him. And, one thing I would super credit him with, and I use the example of where he had a different candidate for my job and that I ultimately got. Mnuchin's not the sort of guy to ever tell you that you were right and he was wrong on something, but he is the sort of guy where if you watch his actions, he will change. He will recognize when he's wrong and he'll do something different, even if he's not going to say I was wrong. And again, you don't need the acknowledgement. You need the actual change in policy. So he's very good at that. The irony, of course, with Dr. Carson, who truly one of the tremendously most nice people I've ever met. He truly is just a tremendously nice guy. And yeah, sure. I mean, he grew up in public housing, but his expertise in housing was kind of limited. And, he had some thoughts on, like lead paint, many of those things. But I think it just ended up being purely coincidental that, the defining events of his tenure were the pandemic. And so, like for me, he was a helpful kind of person to talk through healthcare issues about and get some thoughts on. He generally was a pretty good delegator. In some sense, in the opposite, in Mnuchin, that let a lot of the staff kind of make the decisions, and he would get involved when he felt like he needed to get involved. But I just found him to be a great person to work with. It's a tremendously nice individual. And so again, surprised that it kind of turned out that way. It's not necessarily what I would have expected. But, again, I try to be candid in the book about, what were some of the things I got wrong? What were some of the uncertainties there? And how do you kind of weigh that? And what are some of the surprises? The one things I weren't surprised about was just tremendous joy and honor getting to work with my friend Larry Kudlow on a regular basis, and his team, the NEC, Andrew Ullman, Francis Brooke, who now works for Scalise. These were just tremendously helpful people who did a great job during this. And Kevin Hassett, and Tyler Goodspeed, you had really good people that were core elements of this response. And I wanted to make sure that they got their due and their recognition, and how well that worked. It was a team effort, and there were a lot of good insights, in this. And, Mnuchin, I get a lot, again, there's a chapter on mortgage servicers asking for a rescue, and they often viewed me as their obstacle. But at the end of the day, it was Mnuchin's call. And he did rely a lot on the data and information I was sharing with him. But his instincts were just like, there's not a rationale to bail these guys out. And he really was the one who stuck with that. Obviously, there were some other instances. I remember, so he went in almost every day during the pandemic. Most of my meetings with him were in Treasury. And I remember an instance of walking out of his office and Doug Parker, American Airlines CEO, walking right past me as he's going into the office. So clearly, Mnuchin did not say no to every bailout, but he did say no to some. And again, I just found him, easy to work with in that, he has. I try to relay a couple. Here's probably the biggest surprise for people in terms of Mnuchin. He's got a sense of humor, and I try to relay a couple of instances of that in the book. It's an odd, sometimes awkward sense of humor, but he's got a sense of humor, and again, he really put a lot of effort and time into this. So, and I even, say in the book, and that, I've had the opportunity to deal with a number of Goldman partners like Gary Cohn or Hank Paulson, and John Corzine was on the banking committee when I joined. And I would say without a doubt, the smartest of them that I ever dealt with was Mnuchin. And again, that's not to say we didn't have our disagreements.
Yeah, one last question for you, and this was an interesting point in the beginning of your book that you talk about, is the way that the mortgage market is set up. And ordinarily in economics, we talk about the division of labor and specialization as being a good thing because it allows us to do things more efficiently and then trade for the things that we do less efficiently. But you make the point in the mortgage market anyway, a lot of specialization is actually inefficient because it's the result of response to government regulation and not actually delivering value for people that are consuming the product.
That's probably, in terms of the mortgage market, the biggest lesson I would want people to take away from the book. I mean, we didn't have a free market, Wild West mortgage market in 2008, and we most definitely do not have one now. The industrial organization market structure of the mortgage market is completely an artifact of government subsidies and regulations. And it looks the opposite of probably what you'd have in a free market. And so, again, some players who may even look like they're purely private companies are heavily dependent on government subsidies. So it's certainly not good for the taxpayer, and it's created a lot of fragility. And I talk about elements of that, of why, to me, we had just as similar problems as we did in 2008 and how we handled it differently, but also that there are huge fragilities and problem spots in the mortgage market today. And again, the vast majority of them are the outcome of government policy decisions that have really driven this space. And as you mentioned, this kind of disintermediation is not being driven by economics and efficiency. It's being driven by regulation. So I do want a takeaway from the book to be, we really should be deeply concerned about the structure of the mortgage market, and things have not been fixed. We patched over some things, and we made some progress in some things I did, but there's not a strong foundation under our mortgage market.
Yeah, and there's hardly a better place to learn about it than Mark's book. The book is called Shelter from the Storm. It's out now. You can buy it anywhere you get books, and it's very interesting as a primer on how mortgages actually work, which is wild if you don't know anything about it. It's also great as a sort of guide for how conservatives and how people who just think government should be more limited can serve effectively in government in ways that actually help the people that are supposed to get helped and not help the people who aren't supposed to get helped. And so it's a great book. I highly recommend it to anybody who's interested in this stuff. And thanks so much for talking with us, Mark.
It's been really such a pleasure. Thanks, Dominic.
Thanks.